All right, let's get right into it. The crypto market right now is literally two different universes existing at the same time. In one universe, it's this calculated, long-term investment that's on a clear path to making a whole lot of people incredibly wealthy. But in the other universe, it's a terrifying, chaotic casino that can and will wipe you out in a single afternoon. The craziest part? Both are happening right now. So the question is, which one is real? Let's figure this out.
And really, it all comes down to this one massive question. Is Bitcoin a rocket ship on its way to an absolutely mind-blowing $200,000, or is it a ticking time bomb waiting to go off? To understand what's really happening, and more importantly, which way this thing is about to break, we have to look at both sides of this war.
So, first up, let's talk about the big guns, the institutions, the Wall Street giants with billions, if not trillions on the line. These guys aren't just messing around. They are making a huge strategic bet on the future of crypto. And this isn't about hitting a lucky trade, this is about changing the entire game.
And they are not shy about it. They are putting a number on their confidence. A brand new report from Tiger Research just cranked up its price target for Bitcoin to a jaw-dropping $200,000, not in 5 years, by the end of Q4. That is an insane claim. So what in the world do they know that the rest of us don't?
Well, it turns out it's not just blind optimism. It's a perfect storm brewing from 4 key things. First, you've got these spot ETFs. Think of them as a brand new superhighway for big money to flood into Bitcoin. And they are flooding in to the tune of billions. Second, there is more cash floating around the global economy than ever before. And all that money is desperately looking for a safe place to hide from inflation. Third, you have major companies that are just relentlessly buying Bitcoin week after week, no matter the price. And finally, the Federal Reserve is starting to cut interest rates, which is basically like pouring rocket fuel on assets like crypto. You see? A perfect storm.
And this isn't just some theory, okay? The data is screaming it at us. BitGet News just reported that whales, that's the code name for the absolute biggest players in the game, are on a massive buying spree. And here's the kicker. When the price dips, when everyone else is panicking and selling, they don't see danger, they see a discount. It's a Black Friday sale for them.
We're not talking pocket change here. In just 1 week, these huge players scooped up over 45,000 Bitcoin. That's billions of dollars. This isn't gambling, it's deep, unwavering conviction. They are completely tuning out the short-term noise. But man, that noise is deafening for everybody else.
Because while the big institutions are calmly playing chess, the rest of the market is in a world of pure chaos. This is the land of the short-term trader, where every 1% move feels like the end of the world. And right now, things are getting seriously scary.
So, how do we actually measure this feeling? Well, we use this thing called the Fear and Greed Index. You can basically think of it as an emotional thermometer for the market. When the score is high, everyone's greedy and euphoric, and a pullback might be coming. But when it's low, oh boy, when it's low, there's blood in the streets.
And where are we right now? 18. That is a brutal score. The official reading for that is extreme fear. Now, historically, this is the kind of reading you see right before a major bottom, but it tells you everything you need to know about the mood. So get this, while the institutions are calmly buying up billions, the average trader is absolutely panicking.
And if you want to know why people are so terrified, just look at this roller coaster. October 6th, we're at an all-time high. Life is great. Just 4 days later, bam, a 14% crash liquidates countless traders. Then we grind even lower, only to have a violent, face-ripping rally a few days after that. This isn't investing, it's a white-knuckle theme park ride, and it's no wonder that fear and greed scores in the gutter.
Now, this chart looks super complicated, I know, but the message is actually incredibly simple. Even the pros have no clue what's going to happen tomorrow. This basically shows that a super fancy indicator the experts use has almost zero ability to predict the price. So, if the quants with their supercomputers are just flipping a coin, what chance does a regular person have? You see why there's so much fear? It's pure chaos.
Okay, so you've got these two powerful, completely opposite forces at work. The long-term, cold-blooded conviction of institutions and the short-term, gut-wrenching fear of traders. So how on earth do you navigate this battlefield? Well, we need a plan, a framework, a survival guide for making sane decisions in a completely insane market. The way you survive this is by asking yourself 4 brutally honest questions before you ever click that buy button. Number 1, why am I really doing this? Am I just chasing a pump I saw on Twitter, or do I actually believe in this thing for the next 5 years? 2, what's my plan?
Am I a trader trying to make a quick profit, or am I a long-term investor? You can't be both. 3. What happens if I'm wrong? What's my escape hatch? Where's the price that tells me to get out and save my capital? And 4. What's my backup plan if it all goes sideways? Answering these isn't boring. It's what separates investors from gamblers.
And look, if you want to play in this jungle, you gotta follow the rules of survival. Rule number 1, and this is the absolute most important. Only invest what you are 100% prepared to watch go to zero. I'm serious. Second, don't bet the farm. Keep crypto to a small slice of your overall portfolio, like under 5%. Third, stop trying to be a hero and time the market. You can't. Just buy a little bit on a regular schedule. And finally, stick with the big, established players like Bitcoin, and for the love of all that is holy, learn how to store it safely.
So when you strip it all away, you're left with this: a tale of two completely separate markets. You have the institutional world, focused on the long-term why, driven by spreadsheets and global economics, playing a game measured in years. And on the other side, you have the trader's world, obsessed with the short-term when, driven by gut feelings and wild price swings, playing a game measured in hours. They're playing two different sports on the exact same field.
Which brings us right back to the beginning. We have a market that is coiled like a spring, getting ready for a massive move. You have the quiet conviction of the big money on one side and the loud fear of the crowd on the other. So you have to ask yourself, in this battle between conviction and fear, which story are you going to listen to?